Today is 30th of December 2022 and we are going to do a technical analysis on Bitcoin. It will be an uncut video. I will not edit it, so bear with me if this turns out to be a comparatively longer video. So talking about Bitcoin, as we all know that Bitcoin is the one that defines the market. If Bitcoin is choppy, if Bitcoin is sideways, market will have no direction. A couple of coin or one coin can pump suddenly, but this is not the market direction. Market direction is when everything is going in the same direction. So that's the reason that we are not finding trades these days. We are not there that we can call as an investment opportunity because market direction is not clear yet. So we are kind of stuck in the middle, waiting for something, waiting for some confirmation. And if you measure this area, we are here more than 200 days. That's more than 6 months. So these sideways choppy movements are boring, are time taking, but this, like I explained in the last video with a couple of examples, that this always happens in bear markets. So if you see here, the volume has dried up. The volume is gone. Just look at this. The volume is almost dead. So what we want is we want some volatility to come in, and hopefully the volatility will come when these vacations and this new year, all this stuff will be over. Hopefully the market will be better. It will be more live than we are in right now in this month, especially in December. It's very slow months that we had throughout. We did not see any movement. So in bull markets, or when the markets are moving and markets have direction, you will see that when you will see this, just see this video and remember what I am saying, and you will see this. When the markets will have direction, when you will do this on TradingView, you will arrange them based on the percentage change. You will not see this type of stuff, 2%, 1%, 0.5%. No, not like that. You will see that 15, 20, 30 coins are moving in double figures. And out of those, when you will go to each coin, you will see every coin is in an impulse. And out of those 15, 20, 30 coins, you will pick 5, 6 coins, shortlist them. And that's why I will have here a category of shortlist, right? So I will have here a shortlist category. So I will very carefully see those 3-4 coins that are moving clearly, creating clear Elliott wave structure, and long or short them. So that will be the time that, or those are the times that are good for trading. This is not the time. Unfortunately, in these times, what we get is one coin, and we try to force it. We try to make sure that we trade it because nothing else is moving. So we have only one opportunity. So that's the only problem we are facing these days. But like I was saying in the last video, that these are the times for patience. So you don't have to lose your interest, and you don't have to lose your money. Wait for the time when the market will move. Otherwise, you will lose your money, and when the markets will return, you will not have a good account to trade. So only trade take those trades that are confirmed and you are sure about it. Otherwise, protect it. A day without loss is a profit. Just imagine that you were trying to force it and you lost $500. Now you have to again gain those $500 to break even, and then you get $500, and then you will be in profit. So why not save those $500 and try not to rush in the trade and wait for the good time and good opportunity to come. Let's talk about Bitcoin. So we have one scenario that I was looking at today, and I think if that will play out, that will be the reversal, and we should hope for the best, but always prepare for the worst. And remember that a good trader is a trader who always sees multiple, who always checks the multiple opportunities. Like if a move is happening, you don't just create a bias and you say, well, it's bullish, or you don't just go and you say it's bearish, so it's going down or going up. A good trader is a trader who always looks at a certain coin or at a certain trade through multiple angles. Now, what I mean by that, for example, if something has moved down and then you saw this, so you saw a movement like this, right? So this is where you are right now. Now, an average trader, I would say a trader at an intermediate level who knows about Elliott wave but do not have much experience of the market, and not a professional, I would say a good trader. So an average guy would start automatically assuming that this is 1 and 2 and we are going for 3, 4 and 5. So this is an average approach. This is an immature approach, you can say, that you have already assumed that it's an impulse, right? So this is one opportunity. This is one option. This you can say that this is one case. A good trader will always look at it through multiple angles and try to understand that what can possibly go, or where are my areas to take entry. So this is one case, of course. So I do not deny it, that can happen. But what can be the other cases here? We all know that A also contains 5. So this can be A, this is a 3-way move down, this can be B, there can be C, and then again we will start dropping, right? So that guy who assumed that this was an impulse, what he will do, he will say 1, 2, 3, and he will try to find a long opportunity here for 5, when the market actually will not create the 5, it will create 5 to the downside, right? So that's the second scenario. What can be the other scenario? The other scenario can be that this can turn out to be A, B, C, D, E, right? So you see, you do this 1, 2, 3, then you see again 1, 2, 3, again 1, 2, 3, again 1, 2, 3, again 1, 2, 3. That's possible, right? So we have longer corrections, and this does not happen in bull markets, but this is a case, right? You can't deny it. So it turns out to be a ABCDE movement or correction, and then the market will start dropping. So multiple cases are there. So that's why we take confirmed entries. We wait for the impulse, and we try to understand the market direction. So, or let's assume that we are here, right? So we did this 1, 2, 3, 4, 5, A, B, C, 1, 2, and we are here. Now what you will do? Right? This is what you will try to catch. But you will not assume that we will have another wave up, because the market direction is down, right? That we are in right now. So you will not assume the 5th wave. Rather, even if you are trying to long it and you caught it here somewhere, so you know that these are 5 waves up. So this most probably is going to be an A. This is 3 waves down, so B, and we have 1, 2, and you catch it here, right? And you know that even if it is a C, there have to be 5 waves in C, because C cannot be less than 5. C is always a 5-wave structure, right? So you will catch this portion of the trade, but you will not stay there, you will exit. Why? Because the market direction is down. When you will be confirmed that you are going to catch the next impulse, right? Only this case, let me just draw it for you. So when you will be sure that we are in an impulse, when you will get here 1, A, B, C for 2, you get 3, A, B, C, maybe a running flat or expanded flat for 4, and a 5, and something like this and this, right? Why I'm saying this, that we wait for at least one complete structure to show us a direction. So I'm talking about a bigger time frame, right? Before we were talking here, right now we are talking here. We have created an impulse. That was the first case that we assumed. So we created an impulse, we created and completed the correction, and then we broke it here and we broke the top. This is the scenario when you can say that, well, the next impulse, because this somewhere here was something like this, right? So we got 5 waves down, we got this, and we know that this is going to be going to go up, right? So let's just delete this, in fact, and we are talking about something like this. So this is the market direction. It came from this direction, and you had this, and then you created this, and you are going up. So because market direction is up, so you are going up. Let's inverse it. This is the case that is happening right now. Market direction is down, you get a move up, and you start getting the move down, and the impulse will start to go down. This is what we are in right now, right? So it's opposite to the direction that we normally are in bull market. So that's something that I wanted to explain, that always assume multiple cases. Try to take the parts of the trade that are confirmed. So if you see that there is 1, 2, 3, and for 5 you see that the impulse is starting, that means 1, 2 is created and you are going to go up. That's where you try to catch long. Or when the market direction will start to reverse, and we'll see that clearly the market direction is up. At that point, most of the time we take trades almost blindly for long, because we know that the direction is up. So when the direction will be up, like we'll see here 1, 2, 3, 4, 5, and you see here a correction, and you know that there is an impulse up because overall the market direction is up. So what we do, we almost, like I explained in the last video, we almost blindly trust it. So we start taking entries. First entry here, second entry here, third entry at golden pocket. So this is how we will deal with the market mostly when the market will be in bull market, right? Bull markets are fast, bear markets are choppy. So that's why we don't do this in bear market, like this, because bear markets don't create clear structures like this. Bear markets are always choppy. You can see the difference from between the left hand side, that is bull market, the chart is inverted. So you see a difference here and here. Bear markets are choppy. They always try to go sideways and they do not show you a clear picture. So these choppiness is the reason that we can't blindly just trust that it is going to go down. So that's something that you need to keep in mind. Okay, let's quickly, the video is getting longer, so let's quickly discuss about Bitcoin. So the scenario that I was saying, that if it will play out, that's the best case scenario, and let's hope that plays out. If it doesn't, then we have to assume the other scenario. So the discussion started from here, that there can be multiple scenarios actually. So if we go down to daily and let's try to figure out that where we are at right now, and let's try to evaluate this structure, because this structure took a lot of time. We are here. I recorded my technical analysis, I think somewhere here before this drop, and I said that this structure, I have seen these structures and they normally break to the downside without counting the Elliott wave. Even I said, because of the move, because of the look of this structure. So after that we are in the sideways movement. But let's see this. So the best case scenario is that we create a ending diagonal for the last wave. Okay, so the last wave, 1, 2, 3, 4, or maybe one more push up, whatever it is going to do right now. But let's assume that this is 4 and the 5. This is the best case scenario. Remember, ending fifth wave and leading first wave diagonals. Ending fifth wave diagonals appear in the last wave. So what we have is the longest first wave, second longest is the third wave, and the shortest is the fifth wave. And what we get here is the diagonal. And when those diagonals occur in the last wave, we call them ending diagonals. And when these diagonals appear in the first wave, we call them leading diagonals. Let me take you back where Bitcoin created this diagonal here. So you see this move, the last move of bull market, the previous bull market, you can say. After that we created this, but this previous bull market, and then we saw this drop, we created this. And what was that? The first wave was longest, the second wave was second longest, and the third wave was the shortest. And we can prove it. And how we will prove it? Just easiest way is to take a box measuring wave 1 and see if wave 3 is bigger or shorter than wave 1, and we clearly see that this wave 3 is shorter than wave 1. Now let's bring this box to the top, to the area where wave 3 is, and let's measure if wave 5 is shortest. That means it is shorter than wave 3, and we can clearly see it is shorter than wave 3. So this confirms that this was a diagonal. In diagonal, we have wave 1 as longest, wave 3 as second shortest, and wave 5 as the shortest wave. Now after that, let me invert it and let's see what happened after that. So we saw this after creating the diagonal. Now let's go to our area, and it has not happened yet, but we are assuming that if this is a case, we will see a strong push, or I would say that will most probably be the market reversal. So we see here wave 1, let's measure it. And let's see how much is wave 3. It's clearly shorter than wave 1, right? And now let's measure if this is done and the next move down has started. Let's put the box here and let's lock it here so that it doesn't move. And what we want is that this last wave should not be longer than this box. That will confirm the diagonal. So it should not be longer, somewhere lower, shorter, somewhere here in this area. And then if we break this, that's the reversal. Okay, so this is one scenario. Like I say, a good trader always understands that the market can unfold and there can be multiple scenarios. So one case scenario is that we make an ending diagonal and we go up. So if you watch closely, it's in the area somewhere in 13,000, between 13,000, 14,000, or maybe around 14,000 area. Let's try to see what we have here on the left side at around 14,000. Let's go to 2 weeks, 3 weeks, monthly. We have an order block there, monthly order block. It's lower, a bit lower. So maybe something else. So maybe this all area, right? So this is an area we call this area of interest or point of interest, where we have this wave down, right? So I can't go to 2 months. Maybe let's try 2M, 3M, nothing. But this definitely is some area where we have a lot of support there, right? We see these wicks there. So this box, but of course, if it is longer and we break this box down, the green box, that will make the last wave longer, and this will be invalid. So it will not be a ending diagonal. So to be an ending diagonal, we have locked this box. We'll keep it locked. And what we want is that this last wave down, or this last push down, if it comes down, this should not be longer, and then we break the structure, right? That's what we want. So let's just draw this line here. So that will be break of structure. So what we want, let me repeat it again. What we want is, we want it to not to cross this green box. Otherwise wave 5 will be longer than wave 3. That will not be a diagonal. And then we want it to break the structure. So that's what we want. That's one case. Okay. So let's try to understand the other scenarios. Don't try to be hurry. I explained this in the last video that let it break a structure. We will have a lot of time to invest and to trade. The second case is, so let's just delete this for the time being, and I will make it again after we complete this lecture. What can be the other cases? What can be the other scenarios? So the other scenarios can be that, and that will be very heartbreaking scenario. What it is that let's say this is whatever this is, 1 2 or ABC, a truncated C, whatever this is, or 1 2 in the second scenario, and this is just wave 1 2 of wave 3. So what I am talking about is this 1 2 3 4 5 for wave 5, 4 and 5. That means we are definitely going to go there in the monthly order block area. Right, so we are definitely going down these areas. So this is the second scenario. Let's go back to daily chart. So let's just draw the previous scenario again, and once that is invalidated, we will try to understand what can happen next. So let's draw that. So what we are assuming is that if this scenario plays out, what we want is we want this last wave to not go beyond this box. That will confirm that we have created ending diagonal, right? And once we break the structure, that's where we will try to find good long opportunities for long-term hold in spot, and we will definitely have opportunities to trade for the future. Right, so this is one scenario that I saw this yesterday, so I thought I should explain it to you, that why I am assuming this, and if this will be invalidated, then we will see based on the market position and market direction that what can be the other possible scenarios. Right now, just to repeat it, we are staying away from investment because we don't have a clear direction yet. No break of structures has happened to the upside. So investment, of course, is for the buying in spot, and we don't want to buy right now because we want it to break or give us a break of a structure at least a daily time frame. That's number one thing. Number two, we are not trading altcoins a lot unless we see a clear 5-wave structure. Otherwise, we are not trying to short it. We are not trying to long it. We are just waiting the market to show us some movement, and we will trade accordingly. Right. So I'll get back to you once something happens. Right now, the market is dead. But when the volume will come in, the volatility will come in, I will get back to you and we will record a comprehensive video. This right now is an assumption, right? So once the movement will happen, once this plays out, then only, of course, we can clearly see that what we have done and where we are going right now. So thank you.